Welcome to another exciting episode of the Trading Bell. Today we'll be talking about a very interesting aspect that is happening in the country, and this is matters to do with leasing. And joining me on the program today, we shall be speaking to Bertha Mvati, who is the Managing Director for VAELL. We'll tell you more about what VAELL is all about. But before we get into that, let's take a look at her profile. Bertha Mvati is the Managing Director at Vehicle and Equipment Leasing Limited. Formerly also served as the Regional Head of Finance at VAELL. Prior to her appointment as MD VAELL, she was the Business Manager at Zohari Leasing Limited, a subsidiary of Centum Investments, overseeing the company's operations and strategy implementation. With over 10 years' experience in the sector, Mvati is a focal point in commercializing leasing within the region, as well as innovating an array of financial solutions for a broad range of clients. She's also on the boards of Avantis Services Limited and Jubilant Stewards of Africa, a non-governmental organization. Thank you so much, Bertha, for joining us on the show.
Thank you for having me.
And just to kick this discussion off, talk to us about the leasing environment in Kenya and what VAELL also does in the Kenyan business space.
Right. So the leasing environment in Kenya has changed over the years. I remember about 10 years ago, leasing was a new concept, and you had to train people, as you know, you go out to tell them about the market. But of late, it's changed. There's more awareness. We're not where we're supposed to be. And overall, leasing is like a short-term hire, where you get to access assets, movable assets, you get to use them and generate cash from your businesses.
And looking at Kenya, it's a very virgin market, as many would say. Perhaps walk us through how the business is like in terms of growth. Are there many players? Is it an area that is growing?
I'd say it's an area that's growing, seeing that the government itself got into leasing for the police vehicles. So we can say that there's been some growth in the industry. There's much more that can be done. So that what you find now is mostly that we have corporates that are leasing. We want to get to a place where we have SMEs leasing as well and getting the advantages of leasing. So there's a lot of growth potential in the area. Speaking
about growth potential, of course the government has been very clear that they are shifting from purchasing of their assets to leasing. How big is this market, and are we servicing it to the level it should, or are there still opportunities for growth?
I'd say there are very many opportunities for growth. If you look, the government has so far leased about 6,000 vehicles. That's the government only, and that's only the police unit. So you look at the parastatals and other units and arms of government, there's much more penetration that can happen in terms of the government. We can see the medical scheme, the leasing scheme that the government rolled out. And other than government, then there's the private sector, where we've got corporates who are leasing. We've got very few, it's a handful at the moment, and I believe much more can take on leasing. So there's a huge potential growth in terms of leasing.
And what are the downsides? Because to every business there's the upside and the downside.
True. I think some of the challenges we're facing as lessors is that we've got thinner margins because of more increased competition. There have been many more leasing companies that have come up, and especially banks and bank subsidiaries take on leasing directly. So you find that we get thinner margins in the business. The other thing is increased demand for flexibility, because leasing are long-term contracts, but the market wants more flexibility because it's hard to, put an environmental and economical outlook for a period of 4 to 5 years. So most people want more flexibility in it. I think those are some of the main challenges we're facing.
All right.
Yes.
And looking at VAELL, you were recently also hosted on the NSC incubation program. Talk to us about this, and what does this symbolize for the organization?
Yes, that's true. We were recently listed in the Ibuka program, and for us, we're on a growth trajectory where we're looking to have more systems in place. For us, the Ibuka, it's a rigorous training that we are undergoing, and the end goal is for us to be listed, one day to be listed on the stock exchange. But before that, there are those changes we need to make internally, and a lot of training happening for us to be able to get to that point.
Let's get a bit deeper into this. Many of our viewers perhaps might not really have a clear picture of what being in Ibuka means. It's such a privilege, such an honor for an organization. Just share with us what has been the experience like, and eventually, of course, many corporates that make it to be listed at the exchange, one of the biggest hurdles is to accept that you can no longer have full control of the organization. It is perhaps time to let go and allow another third party to come on board.
Yes. So, I mean, if you're listed on the stock exchange and you're still there, you're a custodian to the public. And it means that you've got to have systems in place. You have to have a lot of procedures that then govern on behalf of the people you're standing in for. In essence, what you're trying to do is that it has to be robust so that you're able to grow. So being in the Booker training gives you a lot of training. You go through a lot of, shareholder trainings, fundraising, roadshows, book building. So it exposes you to a lot that you're not exposed to as a small organization, and preparing you for the day that you get to list.
And of course, looking at this Ibuka program, it's fairly new in the market, and the NSC is very specific, saying that they hope that they'll be able to increase the number of listed companies. Currently, we have 65 listed companies. How long will it take for you to go through this Ibuka program to eventually being considered as one of the companies that can actually list and make it to the list of the companies that are trading?
I'd give it about a period of about 1 year, where we're looking at, it's an accelerated program. So as you go through the program, there's a lot you're doing internally to make sure that you get to the end goal of being listed. So I'd give it a period of about between 1 and 1.5 years.
All right.
Yes.
And enough about the Booker program. Let's get back into the core business that you are in. Of course, according to consumer reports, the leasing market is, of course, advantageous to corporates. Talk to us about why is it that the leasing bug seems to be catching up with many African countries, where we are seeing a total diversification.
Yes. So, I mean, there are a lot of benefits you get from leasing as a company. The key benefits, first of all, is you get to preserve your capital. You get to utilize the capital you'd use to purchase these assets, invest it in a different area of your business, because there's no initial heavy capital outlay. There are no deposits required. You only have monthly rentals that you pay. So you get to know what you're going to pay on a monthly basis. Even for budgeting and planning, it's easier for you. So we've got the capital outlay, we've got the rental payments. There's a risk of obsolescence in assets that you get. So I'll give you an example. If it's something that's technological heavy and it expires, after every 3 years there's something else coming in.
Yeah, why you need to buy.
Yes.
Go back to the market.
Yes. So why buy an asset? It costs you heavy. So why buy it instead of leasing it, and after 3 years give it back to someone else and then get something new? Another benefit that we have, we've got tax benefits, of course, that arise from leasing. Other benefits that you get from leasing is that you get to be able to focus on your core business. For example, if you're a manufacturer and you need vehicles for sales, your business is not managing the vehicles. Let us manage those vehicles for you. Let's make sure your goods get to where they're supposed to get. Focus on the manufacturing, focus on your product, the quality of your product. So those are some of the benefits you get from leasing.
I like what you're saying, that it's a bit more pocket friendly. How cost effective is it in terms of the long term? Because it's one argument to say perhaps if you come on board, you're likely to save. But is it possible to give us a practical example?
I'll give you an example with the police vehicles that they leased in the initial phase. So the first phase, the vehicles that were leased were 3,000 units that were leased. For the government to buy 3,000 vehicles, it will cost them a lot more in terms of the yearly budget they have. But instead, they were able to get, it will probably be able to buy 1,000 vehicles or less, given the cost of vehicles that we have. But instead of that, the annual budget they get, they use it to lease vehicles. So it allows them to have much more vehicles than what they would actually have with the budget allocated. So it gives you smaller payments to make monthly as you get much more of what you need.
And are there markets within East Africa that are doing pretty well when it comes to leasing?
I think Kenya is on the lead in terms of leasing. Our neighbors in Tanzania are a little bit more developed because they've got a leasing law. They've got an act on leasing. So in Kenya, we do not have, but in terms of business and volumes, I'd say Kenya is in the forefront in terms of the numbers we're doing in terms of leasing.
Perhaps outside East Africa, which other countries would we say we can benchmark with, especially when it comes to the leasing market? For instance, in South Africa, Nigeria, Egypt, Ghana, how are they performing? I
think South Africa is way developed in terms of the leasing, because you find that at the level where they're able to lease to individuals. As a country and East Africa region, we're not yet there in terms of credit ratings and credit information of individuals. So they are more advanced. You can walk into a showroom, lease a vehicle. After 10 days, after a month, you can go back, switch the vehicle and get something else. And that's what we hope to get to in terms of the Kenyan market, where it can be accessible to everyone and not only individuals, especially SMEs, because they're the backbone of this economy, and this having them have access to the vehicles and assets on lease would really help them. It's a form of access of credit for them. Yes.
And what are some of the policy issues that perhaps you might want to see the government put on the forefront so as to make the business environment more friendly, especially when it comes to matters to do with leasing?
I think just to have a loan leasing, a specific loan leasing, you find that most of the time we make reference to the Hire Purchase Act, which is not accurate to what we do. So just to specifically have something that governs the law on leasing, a law on leasing and industry in general.
So for this to be able to be formulated, how will it impact on the overall business?
I think it will have regulations. We'll all have a code by which we have to go through. We've got the Leasing Association of Kenya that's active, and many of us are members of it. But with the law, then it gives you're governed. That there's a road that you need to follow for you to get business, to do business. Yes.
And as we come to the tail end of our discussion, I just want to get and pick your mind, especially where are you seeing growth in? Which are the likely growth frontiers? Because leasing is very broad.
Well, I would say that there's a lot of innovation needed in leasing because the market is changing, the environment, the whole environment is changing. So there's a lot of innovation needed, and we're trying to be in the forefront as VAELL, where we've come up with a few products that help us with that. So we've got what we call timeshare, and with this we're telling you, you can have an asset, use it for the period you want. So if you have a peak season in terms of production and your peak is only 3 months or 6 months in a year, use the asset for that year, for that period, bring it back, and then someone else can use it. So it's something we call a timeshare product. And we've also got transport and warehousing. So what we're trying to do is be very innovative, come up with products that are still leasing products, but suit the market and address the market needs that are there.
And still staying with the growth outlook, within your business, of course, portfolio, which area are you also seeing growth in? Because there's the vehicle aspect, there's the warehouse, and other dimensions to the business.
Yes.
Which area do you foresee highest growth in, especially in 2020?
We're looking at yellow equipment. I think the government is big on construction, affordable housing. So with that, you find there's a lot of demand of yellow equipment in the markets that are used in these areas. So that more than vehicles. The vehicle leasing has reduced a bit. So we're looking at more yellow goods.
All right.
Yes.
Thank you so much for your time and for your insights. We do hope that of course, the market will continue to expand and there'll be more opportunities for businesses and for the consumers. Thank you.
Thank you very much. Thank you.
Very, very honored to speak to you. Well, we've been speaking there to Bertha Mvati, who is the Managing Director for Vehicle Equipment Leasing Limited, Kenya. Just walking us through actually the very interesting dynamics that continue to characterize this very interesting sector. And of course, she has a very optimistic outlook for 2020. For now, we want to take a look at how the markets have been performing in this week's trading market analysis. Thank you for joining us. We continue with the market analysis. Today on the program, we shall be speaking to Samuel Gishohi, who is from NCBA Bank. Such a pleasure to have you on the program.
It's a pleasure too.
A lot of activity from the markets, a lot of issues happening, especially in the financial banking space. But before we get into that, Samuel, let's look at how the indices have performed today. The all-share index is at 159 with a drop of 4.56%. And the NSE 20 is actually down by 2.93%, trading actually closing off trading at 2,523.35. Should we be concerned about this?
No. I think we've seen quite a bit of a spike in volumes today, and of course in the last 1 or 2 days. And again, we are just coming from December where we saw a rally, unprecedented. Shares hit some all-time highs. I think Safaricom hit over 33, and the banks touched 55, KCB, Equity. And then now we expected a correction in early January to mid-February, which did not happen. Seems that now probably is when it's happening. But that said, we're expecting banks to start releasing their results. So I believe a lot of people have already taken positions and are waiting now to see what the results will yield, so that they can now make decisions on whether it is about dividends or is it are we going to see a rally after that. But I think this is just a simple correction. All right. I don't think there's any economic indicators that can cause us to be alarmed about it.
Great. Yes. And Samuel, talking about the banks almost releasing results, one of the banks that is the talk of town this week, of course, is Barclays, which officially converted to Absa Bank Kenya. I'm seeing it's one of the top movers today. It's moved about 243,300 shares. And just looking at Barclays, the journey to what it is today, perhaps what does this signal for the entire banking industry?
Well, I think it just comes on the back of several other merger and acquisition deals, which we have seen, and it has been a trend in the market for the last few years, 4 or 5 years. And the reason we are starting to see this is because, especially during the interest rate capping regime, and also because of new rules, for example, the IFRS 9, which says you have to make more provisions for the loans that you hand out, means that a lot of smaller banks struggled with the capital adequacy ratios. And for that reason, we are starting to see now, again, in an industry which was, I believe, overbanked, we are starting to see consolidation, where we can have a few strong banks rather than having so many small banks, because then that many small banks leads to uncertainty and instability in the banking sector.
Well, the central bank governor is on record saying that Kenya as a country, we are slightly overbanked, with over 43 banks operating for a population of just under 50 million. If you do the math, it technically means for every 1 million, there's one bank. When you look at other markets across East Africa and even in outside East Africa, there seems to be a concerted campaign, especially when it comes to consolidation of the banking industry. How is Kenya catching up with this?
Well, I think they allowed the market to deal with it, which it is doing. As you can see, we are seeing all the mergers happening. We see also KCB, NBK. We've seen Equity, buying several banks. I think regionally as well, they're trying to do that. We've seen CBA, and I see now become NCBA. We have now Absa, but Absa is actually an acquisition from Absa of South Africa. But what I think is that stronger banks can have bigger and better networks, because in as much as we are saying overbanked, it means we have the number of banks, but do we have coverage across? Because then if we had so many, a bank for every 1 million people, are the banks banking the 1 million people? I think, again, we are still underbanked because we don't have everybody working in the banking system. We've seen the digital banking platforms, the M-Shwaris, and take that space because there was a need to reach that person at Mashinani, where the banks were not anyway. So I think it is still a good thing to have a few strong banks, because even for regulatory purposes, it is easier to monitor a few big, strong banks than so many all over the place. Can be a nightmare, I believe.
Interesting. And Sam, as we come to the tail end, of course, the rebranding of Barclays comes to feed this narrative that the consolidation narrative is gaining momentum by the day. And on the flip side, what do you see for the financial sector, especially in 2020, where it is a year that has been termed to be a slightly better year compared to last year, and the economic fundamentals around this have been pegged on the good rainfall we experienced end of last year, and of course the repealing of the rate cap. How will this really impact on the banking sector at large? Are we likely to see the cost of credit going further down? Are we likely to see banks tailoring products that will be really centered on the customers?
Well, we have had, of course, from the banking sector that they intend to keep interest rates at the lowest possible they can. Of course, it's market driven, so whether they go up or down is really a market function. That said, the fact that now we are going to start seeing at least banks giving more credit to the private sector after what was happening before the interest rate caps were removed, because what was happening is that banks, the government was crowding out the private sector, and that means that most development that was happening or of GDP growth that was happening because of infrastructure development, which was really on a lot of loans that we've been seeing the loan burden increasing.
Sure.
I think at the end of the day, we need to see that equation move to the private sector, where the SMEs and the private sector is now using those railways and those roads and creating more taxable income so that the government can raise taxes to be able to pay for the same loans. So I think there'll be a lag factor because they've suffered a lot. There's a lot of SMEs and companies that we've seen even their retrenchments and everything. But once that lag factor is over and they recover from the holes that were dug, then we can be able to see the economy accelerate. Hopefully the banks will lend aggressively to the private sector.
All right. And I hope the government will also pay suppliers.
Absolutely. I think one of the holes that they're seeing is those suppliers, because then if you haven't been paid for 2 or 3 years' work,
all right.
Then it means you have to borrow to survive to pay your workers.
All right. Coming up next is Markets 101 for this week. Well, it's now time for our favorite segment, and that is Question on the Street. Today's question comes from one of our viewers on our social media platforms, and the question is tied to the banking sector, and it goes, why did Barclays stock get suspended from the exchange when it was rebranding to ABSA? Over to you, Kishohi.
Yes, what happens is the markets operate on what we call efficient market hypothesis, which means information should reach everybody at the same time. Now, if at any time there is what we call a material public announcement, something that could affect a share price, then the share is suspended so that by the time the share is back in trading, everybody has that information so that the trading is efficient. So anytime, say, a company is announcing their results, you'll find they'll be suspended probably on that day for trading. If, say that, as you said, the name was changing, or there was a merger and that was the first day they were coming to the market, or an announcement on that merger was happening, then you will see a suspension happen.
Great, great insight. So people should not be worried. The same institution is still in place. It is still in place. It is just to protect, of course, people who haven't gotten the information. All right. I'm assuming somebody, Wanjiko in the village, maybe has to see it in the newspaper tomorrow morning. Great. Yes. Up next, we have historical fact. Thank you so much, Samo. You're welcome. Such a pleasure to have you on the show. Thanks for having me. Well, that's why we bring it to a close on this week's episode of the Trading Bell. Quite a very busy week for the financial sector. And of course, you can always get unmatched analysis here on the Trading Bell on KTN News. Remember, you can engage with us on our social media platforms appearing at the bottom end of your screens. And of course, let's keep it locked here on KTN News.